Now that we're at the charts, what I'm about to show you is a trade that I took while I was in Turkey, Istanbul. So I'm going to link the vlog up here if you guys want to watch me take the trade live, manage the trade live, exit the trade live, it's all there. But the reason why I'm using a real life trade example is because I don't want this to be like a hypothetical thing. So let's begin. On the weekly chart, first of all, what is the answer, right? How do we prevent or minimize the frequency where our trades hit our stop loss and then it just boom goes in our favor, but not before taking us out first? The answer to that question is using multi-time frame analysis. What that means is you should not be only using one time frame when you're trading. And I know a lot of you guys do this, all right? I really think that's a very dangerous way to trade. That's not how markets work. You need to know where you are in the market. And the only way to do that is to use multiple time frames in conjunction with one another, which is what I'm about to show you right now, all right? This is how we do it. So we first begin on the weekly chart. The reason we use the weekly chart first is because it gives us a bird's eye view. It's just a nice bird's eye view for where we are trading in this market. This helps us manage our expectations. Are we trading from a macro support level? Are we trading from a macro resistance level? Where should our macro bias be? And whenever you're analyzing on the weekly chart, so this will apply to day traders as well, all right? Just because you're a day trader doesn't mean you should never use your higher time frames. That's also another big misconception, guys. That is completely wrong. Okay, and you will see by the end of this video, you will see why that is. All right, so the weekly serves as our bird's eye view, and it helps us detect the important macro levels in the market. So in this case, it would be this level right here. This is our macro support level that price has captured liquidity from. That's beautiful, right? So that's all we know from the weekly. That's enough. You don't have to overdo it. Just keep it simple, guys, all right? You don't have to be a rocket scientist to analyze charts, honestly. A lot of people get that fucked up too. Anyways, on the daily, do you see this level? This is the key resistance level on the daily chart, right? Price broke above that, but then it ended up coming back down here, but in a very corrective way. And that's the key. In this daily chart, that's the key clue, right? When price is moving correctively in any direction, whether it's up or down, that usually means that it's not sustainable, right? That price will eventually find that upside once again, right? So that's what we know from the daily. And that's very good because on the weekly chart, we know that we're trading from macro support, which means we already have a default bias to the upside. You're starting to see how multiple time frames can help each other out. It can help make things clearer in a way that a single time frame can never do. Going to the H4, okay? We confirm that indeed this downside is very corrective, guys. This is what corrective means. It's literally when a move goes like that, right? So now that we know that this is a corrective downside reversal from key resistance on the daily, we have a suspicion that, hey, this will likely not last, right? This downside move will not last, and eventually we are going to find the resume in the uptrend, which we did get, right? And that's the trade that we took. So that's what we get from the H4. What else do we get from the H4 is we get literally a perfect bullish engulfing candle. I'm sure you guys already know what this means. A bullish engulfing candle, especially, this is the key clue, all right? I'm going to give you an advanced tip. A bullish engulfing candle, when it's preceded by several small red candles. So again, this is very weak price action, right? And then boom, we print a monster bullish engulfing candle. That is the market trying to tell you that, hey, your upside continuance, that resume in the overall uptrend that you've been suspicious about, it's finally coming here. That's what the market's trying to tell you, okay? So be on the lookout for these kinds of patterns. It's even better when we have a lower time frame point of liquidity to serve as a local support level where price is bouncing from. That's even better. That's chef's kiss, right? So we have that right here, which will be made more clear once we go into our 1 hour chart. So in the 1 hour chart, this is our local support level, and we indeed confirm that this upside impulse is extremely strong, right? We like impulsive moves. We want to trade continuations from impulsive moves. And what's even better, we impulsively clear this entire level here, right? This is the level to beat. And if we can beat that level impulsively, we have even more confirmation that this trade is solid, that we want to see lower time frame continuations here. And so let me now show you what my entry criteria looks like. It's called a continuation structure, right? So we have very clear bottoms and tops, and we're looking for 3 bottoms. That's how we know that the structure is deliberate. Deliberate meaning it's not an accident that the market forms something like this. It means something, right? And what it means is we have an edge right here, right now, that we are indeed seeing a continuation to the upside. So we like these setups. It looks like an origin impulse. That's the first thing you need. An origin impulse, right? And then you need the continuation structure. And then once we had this candle here, that's a beautiful bounce, right? That hammer on the 15-minute chart. I entered the trade a bit late. I could have gotten a more precise entry here, but I was in the, I don't know, in the airport or in the cab. I was going home. That's all I remember, right? My trip was over. So I was kind of busy, you know, and by the time I was back on my phone looking at the charts, it was already here. But because I knew that my entry criteria was all good and I had everything I needed to take the trade, I just entered it. Guys, that's the reality. Sometimes you're going to enter your trades late. That's life, especially when you're doing things, you know. So yeah, this is how I entered the trade. Stop loss right underneath this level. So to recap this entire video really quickly, we have 4 time frames that we use. The weekly chart is the first time frame that we use. It gives us a bird's eye view perspective of where we're trading in the grand scheme of things. It's not the relevant higher time frame, but it's still important for you to manage your expectations and know where we're trading from. Especially, it helps with identifying our macro levels, which then give us our higher time frame bias. So that's really important. Next is the daily time frame. The daily time frame gives us the relevant bias. All right, so even if the weekly doesn't say anything important, the daily will. And we know where the higher time frame flows, where all the momentum is going. And we want to be trading with that momentum in the higher time frame. That's why it's so important to know all these higher time frame levels and momentum. Where are we trading from and where are we trading to? Okay? Now that you've set your higher time frame bias, we go to the next time frame, which is the H4. Now this is the first lower time frame chart. And the H4 is simply to identify strong candle formations. That's very important. Do you have strong candle formations in your direction? And is it bouncing from a local support level if we're looking for longs? Everything can be inverted if you're looking for shorts. Same thing, right? But essentially, that's the idea. You're looking for strong candle closes from local support levels or local resistance levels. Same thing, okay, depending on the direction. And finally, the H1 time frame. That's where you actually identify your entry criteria. And sometimes you can refine this into the 15-minute and even the 5-minute, okay? That's why I keep telling you guys, this strategy is a day trading strategy as much as it is a swing trading strategy. It's a hybrid. You can do either, right? That's really the beauty. Just give me a call. I think I'm going to schedule some calls with some potential students, and we'll see if it's the right fit for you. And until then, if you have any questions, just leave it down in the comments. I'll see you guys in the next video.